We're back here now. Now there's sound. Welcome to the pre-market rundown. Andrew Horowitz here, and you are with me for the TriggerCharts Friday, August 30th pre-market rundown. As I mentioned, I went to the B-52s, the OMD Berlin concert last night. So rundown has a couple of meanings for today, but we're going to get on with this right now, and let's take a look at what's happening with the markets and what's going on here. You can always, of course, find more information over at TriggerCharts.com and over at TradeStation, where TradeStation has all of our information on there. So let me get a few things set up here. There we go. And everybody can hear me okay? All right, great. Okay, so let's talk about a few things here. First of all, let me mention that it is important to recognize that we have a disclaimer here, disclosure, that this is for educational purposes only. It's not to be used as trading ideas necessarily for you to implement, do your own homework, your research, and make sure you understand what's going on with regard to all of the components of your investment plan, your risk tolerance, your time horizon before you make any investment decisions. So that's all the information right here. And today we're going to talk about a variety of things. Let's see where we are right now in terms of the markets. The futures are up again, another nice day since that reversal we saw at the mid part of this week. Let's see. We have the Dow Jones futures up 139, some of the Qs up 42, and ES up 16. Gold is, of course, moving up again. Seems to be a never-ending move for gold lately. So I'll mention for everybody that's attending, we have a really good audience, and I want to thank you for that. And if you have any questions, put it into the chat. I'm going to put right here so you can see it pop up there. There's a little button you should be able to see there, and open your chat and put in your stock symbols. We'll get to that towards the end. So with that in mind, where are we? What's going on? We got the trade deal on. We got the trade deal off. We got a trade deal on again. We got talks on. We got some kind of discussion going on, supposedly with both sides disagreeing about actually getting anything done. But here's the thing. It looks like some of the tensions have come down, as China has mentioned at the end part of this week, that they are not going to retaliate any further with the tariffs that were recently retaliated. We have new tariffs, retaliation, further edicts, and then more retaliation. Now China's saying, you know what, we're going to hold off. No more retaliation for a little while. So with that in mind, the market has said, okay, good news. However, realize that September 1st at midnight, or midnight into September 1st, we're going to actually have an increase in the tariffs and a new tariff set from China. Markets are seemingly putting that aside, saying, okay, we really don't care too much about that. But you know what we're seeing is that there is this this level of anticipation, I guess, in terms of all this. So we are seeing that things are moving up pretty nicely. A little bit of a rebound off the bottom. We're going to talk about why that actually is in a little while. We have retailers this week. Did you see what's going on with the retailers? I mean, some incredible bounces on some of the names that were oversold dramatically. I mean, we talked about how retailers were down 50, 60, 70% this year. And all of a sudden we see this rebound that's going on. Pretty amazing stuff that we saw. And, you know, like 15, 16, 20% on some names on these rebounds because things aren't as bad as was anticipated. The concern that there was this level of they're going out of business. Oh my God, it's all over. Retail is dead. Amazon has taken over. Online has taken over. The old line is just done. Forever 21 is going to be exploring bankruptcy. We have other companies that are still probably in really bad shape, but the consumer has been pretty strong. Some numbers out this morning showed the spending was still pretty good, and the GDP numbers that we saw yesterday, even though revised down from 2.4% to 2.1%, has shown that the spending continues. So the consumer is still feeling pretty confident. We also confidence numbers on Tuesday, where confidence came out a little bit lower than it was in July. The August numbers came out at about 135 on the consumer confidence level. That wasn't as bad as expected either, and there is still some confidence, even though August showed signs of fatigue when it came to markets and investments. So what we're looking at right now is this whole idea that, well, maybe things aren't that bad. While the rest of the world is seemingly caving in, folding, and being decimated by the tariffs, by the issue of negative rate on the yields, on the slowing economy in Germany and Japan, China at 27-year lows on their growth. Maybe it's not so bad here. Maybe we'll avoid the worst of it. like we're hoping to avoid this storm. I don't know if you've been tracking it, but we're here in Fort Lauderdale, and we got this storm, this Dorian, coming right at us, and hopefully it's going to pass by and scoot a little bit north. That's the hope. We're all hoping. I'm sitting there hoping, oh, maybe it's going to pass by. I'm going to wait a little bit towards the end of the weekend to make sure where it is to get everything done. Same thing, what happens is last minute planning. People are saying, maybe there'll be some resolution and looking into buying stocks and making sure they don't sell anything off right now. Even though we saw that massive volatility, VIX is still about 19, and we saw that there's a lot of question in terms of how this is all going to play out. I think there's a lot of optimism still in the markets. One of the things that we saw over the last couple of weeks that's really been rising to the top of the pile in terms of what is really important is the whole idea of recession. We see it all over the news. Are we going to go into a recession? We see the 210s that are inverting right now. So what's happening? I did a little study. Check this out. Looked at Google Trends, looked at it over the period from 2004 all the way through 2019, where we are today, and looked at the mentions, the times that the word recession was mentioned. And this chart is a 100% chart, shows the most times that it was mentioned over a period, and then it looks to where it's not really mentioned. So you'll notice here is that over on the area or during the period of about 2006 to 2008, we saw a real big spike in the research and the search term of recession. And where we are now, and what would have happened is this major spike again, up to about 87 right now. So we're watching that because you have to question whether we're going to talk ourselves into a recession by thinking that things aren't really good and there's really a big concern about what's happening out there. So we got to keep that in mind and watch that because, like I said, it's a self-fulfilling prophecy possibly that we're talking ourselves into where people will be pulling back. Haven't seen that yet. Again, with confidence up, with spending up a little bit. But the bottom line is that if things do turn and things get a little dicey and people get concerned, this could be something that we really are bringing ourselves into rather than being forced into by the actual trend. So we see a big move in the markets, of course. GDP was revised down. I mentioned about that. $1 trillion of corporate debt at negative yields now. That's something we've been talking about over the last several weeks. Next week, we have construction spending, the Fed's Beige book, ISM manufacturing and services. This week, we saw the market number come out, sub 50 for the manufacturing of the flash index for manufacturing. That usually correlates pretty well with the ISM manufacturing, which is about 30% of our economy. 70% of our economy is really service-based right now. We have to look at this and consider the fact that there may be a manufacturing recession on the way. That probably means that while it's a smaller part of our overall economy, that we'll see some layoffs continuing. We saw some hints of like US Steel laying off 200 people, Ford laying off people. So it's not that big of a deal right now as we see initial claims still at about 215,000 on average, 210,000 on average for a weekly basis. This week came in at 215. But next week we will have the employment report on Friday. So all things equal, expectation is still about 175,000 overall and about a 3.7% unemployment rate, 3.8, give or take a little bit. Make sure you're on the mailing list. Of course, go over to TriggerCharts.com and check it out because you can make sure to get all the updates on a regular basis. And of course, I'll mention this again, this is really important. Anybody that actually signs up, and we have a lot of people that took advantage of this, so you want to be a part of this too. If you sign up for and subscribe to the TriggerCharts Commander Series Indicators, you will get a 4-hour online coaching course, which is pretty much our evergreen piece that we put together, valued at $199 for free. So make sure to get your hands on that. A couple things I want to look at. Let's look at, let's take a look at my screen now for a second here. Let's look at our KRI, the key reversal indicator, getting a little bit hot here. We saw this and we've been monitoring this each and every week because we want to see where we are with this. We saw this kind of lull right here, an oversold condition, starting to resolve a little bit. Getting, if you look at the top right here now, we're getting into more of a an overbought, but not so much that's a concern, right? We're not really seeing this as an area that is a concern at this point. We're seeing this more so as just something to be aware of. And we're kind of looking at this chart here, market near equilibrium, a +1 as of yesterday. And that's pretty simply said that that's, not much happening there. I also want to look at, if I can, right here. This is our two charts that I want to look at. I always look at this when things get a little bit crazy with the markets. I want to look at two things. I want to look at the McClellan oscillator, which is this mid part right here. And I want to look at my Spearman index. And I want to also look at the 52-week new highs, new lows. That's starting to pick up a little bit better. 152 new highs that were recorded overall, much better on a weekly basis. And what we're looking at here is the spearmint still below zero, not a really good sign, even though we're seeing a pickup, a little bit of a divergence there. However, the advanced declines and what we're seeing with McClellan is confirming the fact that we are seeing a little bit of a upside move here. And we can see this with the trend, which we're going to look at. So usually what we do is we look at our commander series and we look at what's going on there, and we see what's happening from a support resistance point on some very key indicators. Particularly, we're looking at volume-based market profiles. Today, we're going to do something a little bit different. We're going to look at the aileron. There's the aileron 360 part of it, which you're looking at right now. This is also available at the trading app store over on tradestation.com. I wanted to take a look at this. You can see there's a bunch of colors here and triggers crossing up and extreme levels that we have here. No real reversals on any of the names that I put down here, but I want to look at a few of these to take a look. So let's look at SPY, for example, right now. SPY's at a plus 20. Now, I really want to focus in on the lower part of this chart today. I want to focus in on the trend, extremes, clusters, crossing. I want to look at the triggers and reversals. Right now, we're seeing is there was a really good level of oversold. This is very much in line with what you've seen from things like a MACD or maybe even a stochastics. What this does is it takes into consideration a number of different proprietary and some that are basic oscillator and trending indicators. And what it looks at is a combination of all these, and we do a lot of scoring in the algorithm that puts this together, and we find where there's some severe overbought, oversold, or trend areas in this. So you can see, for example, right here where we're looking at some overbought levels that's all of a sudden started to turning down. So we give you a daily or whatever the time frame that you look at, but right now we're looking at daily for educational purposes. You look at this and you see that there is this nice opportunity above the zero line all the way from, when we look at this past, let's look here, all the way past from about June all the way through about August, there was a nice upside on the above zero, and all of a sudden we got this signal here. Now you got this cluster that happened back in July, but yet we saw a little bit of a drawdown here, but not a below zero move. We saw that the same signal happened, and all of a sudden we got below zero, and that's a concern. Once you see that tick to the opposite side, you have to say the momentum has changed dramatically, something you need to be aware of. So that's important. Okay, so now what we see is we got an oversold situation back on August 5th, not really resolving too much. Matter of fact, downside action persisted with in terms of the trend, in terms of the overall structure of the aileron, not looking at price here for a minute, just looking at the structure here. And what we see is when you look at this, we're kind of looking at, okay, well, there is an oversold situation, not really resolving, but we're starting to see a little bit of reversal. We're starting to see just a slight amount of uptick overall. Markets are in this pattern that's just simply, it's up and down, not going anywhere. Now what we're seeing here is, look at this. We're seeing that it's gone above zero. Now, not only is the indicator itself above zero, we're starting to get the moving averages. We have a combination of an exponential moving average and a simple moving average that we're looking at here. So we get a cross above from the exponential moving average. That's a good sign. Still not above zero for a little while, but we did pop above zero on the exponential moving average just yesterday. So that's important. When we look at the Qs, let's look at this. Look at the Qs. Okay, now we're looking at the Qs. Same kind of scenario. Oversold dramatically. Looking back over where we are, right over here. And then we see this same pattern that nothing's happening, and then it pop up. We saw this crossover right about on this date right here, but still not confirming because we're not moving significantly above the zero line. We got that yesterday. Exponential average is moving up, but at the same time, I'll just mention that we're not seeing that confirmation from the simple moving average, still below the zero line. An important level, you want to see this above zero. It's starting to give us the opportunity to look at that there is a trend forming. Still a little bit unclear when it comes to that. On IWM, this is interesting. Trend clearly down on the small caps. And I want to look at these because I think it's very important to take a look at what's happening here and what it shows us. There was an opportunity when we look at this overall from the perspective of right about here, right? There was this oversold level, corresponds to about right there. And again, we're not using any other indicators right now, but the aileron. We're just looking at the aileron. I like to combine this with the, and you've seen this before, I use this on a regular basis when I combine it with our market profiles and I combine it with our Commander series, especially when I like to look at this in combination with the altimeter, finding those bases, finding where those bases are, and there's really good support, and all of a sudden there's a opportunity for the aileron to start shooting higher, and we call that a banger, the banger pattern. And that's an important pattern because it shows it's oversold, but yet the opportunity for people to say that they're harnessing a lot of the support, and there it moves up from there, and when it does, usually see a significant rebound. That banger is an important aspect of the aileron, but again, we're just looking at one component of that. But at the same time, we saw a little bit of a pickup here. Look at it started picking up and then drop, 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 and we saw it oversold. It's not resolved. You can see that without looking at the chart on top here. You can see there's no resolution to this downturn. This selling pressure has been significant. The trend has been down. While we're seeing a little bit of a cross up here, where we're seeing that there is just a slight move. Let me move that over a little bit so you can see it better. Right there. And let's take a look at that. I'll hone in on this. See how it just slightly moved over to the upside here? Still not impressive. You know, we're not seeing anything that shows us that there is a real upside opportunity right now on IWM. Trend is still down on IWM. So I want you to consider that in total. Very weak positioning of small caps right now. Gold, on the other hand, look at this. We're seeing that it's since, where's this back? Back to June. Let me move this up a little bit. Back to June, you can see that this really moved above the zero line. Yeah, we had some clusters formation, but it's been above zero consistently. So the aileron has been pretty accurate in looking at where the trend is for this. Is it changing now? I mean, we see a cluster forming. We see some red forming. We see a bit of an overbought situation in terms of gold. But still, it looks to me from a trend and an overall pricing move, it is still in an upward trend. There's no denying that. Until we get a cross back below zero, it is a problem. Yes, you could say, well, you know, we're seeing that there is some overbought here. Maybe I want to take a little bit off the table because oftentimes a few days after an overbought, you start seeing a resolution down, here down, here down, here down a couple of days later. But until it gets below zero, the trend still, generally speaking, on this time frame is still positive. Same thing with GDX, of course, because that's gold miners. A few stocks I want to talk about today before we get to any of the stocks. What time we got? Okay, we got some time. You can see that BBY, very gappy, but we did see that there was a nice upward move. You know, you would have obviously had some problems back here when those tariffs were put on, and there was no real trend. There was no information available for you to really do anything with this because those tariffs were put on, and it was more of a surprise. So it really was a market-based move with an outside influence rather than just Best Buy. But since then, the trend has been down. You can see that. There's been no resolution to the upside. Yes, we got a little bit here, but again, I'd like to get a couple of days in the bag on the upside above zero before I do anything. You know, you got this move that was really good right there, but, you know, again, this is all tariff related. It's a pretty interesting stock. Look at this stock. It's just ridiculous. This is Dollar General. Trend has been pretty positive here. We had some blow off on the bottom end over here, but again, once you got above the zero, right about at this level here, trend looked like it was continuing. These were shallow. Also, we look at, you know, how shallow or how deep are the levels. You know, here's very deep. Here is very, you know, the upside is deep. These are in between here. These were kind of shallow. We only got down to about a -60, not the -70 where we saw clusters forming or any level of magenta bars forming. So pretty easy to follow this along. Again, color coding. You know me, I like colors. Makes it very easy on my life to deal with where we have a color that is red or green or magenta or orange, whatever it may be, yellow, very easy to deal with. We know this is basically a heat map of where the trend is. So when we look at Dollar General, you can say that there has been a great upside opportunity going back a long time, very shallow pullbacks or trend moves to the opposite direction. So counter trends have been very shallow. A couple of them here that seem to be very oversold. Clearly it went from about 130 in May down to about 115. Not that big of a deal, about 10% overall. But when we look at this and we see that there has been this nice upside action here without any major moves to the downside that would be really concerning, you can see that there was a level of optimism in the stock. Another stock with earnings recently, we saw that, look at this, this is very clear, isn't it? Isn't this very clear? Just look at this whole range that we have on the bottom here. When we're looking at this and we see that there is a continuation of downside trend, it's not resolving, get a little bit very shallow move, but then it starts resolving a little bit better, great, but then it moves down again. You're gonna probably see a continuation of that trend over time. Now we did see earnings kick in, and now here, look at this. You would have actually gotten back into this stock probably at about 20. Then you got that upside because you would have seen that there was a nice reversal, a counter trend trade or trend that was going on right here against the grain, and there was some great support. And if I probably put on this stock with the altimeter part of the Commander series, then you would have had that. By the way, you can find the Commander series over, there's a link that I think Kevin just put into the chat, and you can find that as a 10-day free trial on all of our indicators. Some of them are free also completely, but the ones that are our premium products have a 10-day free trial, so you can check them out, see what's going on, and use them in the full version 100%, and then check that out. So pretty good. And of course, I mentioned, for those of you that just tuned in that haven't been here before, earlier, that there is also a $199 freebie that we're giving away for anybody that signs up for the Commander series. So check that out. Lots of videos also and training over on TriggerCharts.com. Kevin just posted the link for the overview videos on all of these, plus the webinar replays are always available on our YouTube channel as well as on TriggerCharts.com. But here, just to go back to this for a second here, you see that there was a significant change. You would have gotten in right about here if, in fact, all the other parameters met. But on Aileron, it clearly showed you that there was the reasoning, there was substance for the fact of looking at a change in trend that was very dramatic. And that's good. The more indicators that you have, and this is what I like to do. So let me give you a little hint on how I like to trade. The more indicators I have that are giving me confirmations, the better I feel about the trade. The more confidence I have in the trade. The more confidence I have in the trade allows me to enter into it with a lot higher conviction level. And that being said, what's important about that is you want to have conviction on your trades. You don't want to be wishy-washy. Once you do that, you're out as soon as things turn against you. And you could have been right for the long haul. So keep that in mind. What else do we have here? I think we have another stock or so. Let's kind of go down here. We got a write-in. Somebody asked me about, what about this stock? So let's look at the Sempra Energy. I mean, you look at these, the general concept of higher dividend paying and more high quality stocks. Look at this. From 2019, went from 110, 142, straight line up. Some of the stocks that have this similar look are the utilities. I think if we look at like an NEE, similar look, beginning of 19 to now, it is moving up very nicely. But when we look at SRE, back to this from an aspect of aileron, so what do I see here, right? I see the trend has been good, not as shallow as I'd like to see these roll-offs, but we did see and get a warning because right here, when it went below zero, did see a little bit of a warning there, and the trend did change. You would have looked to possibly get back in somewhere right about here. So maybe out right about here. So no loss on the downside, get right back into it. Again, if it held. Interesting pattern here too. You see this V pattern that's developed here that looks like it is all about the interest rate environment right now. By the way, give me your stocks. If you have some stocks you want me to look at, put them into the chat box and we'll take a look at that. There's a few other things. Let's check where we are on futures taken down a little bit into the open. But let's take a look at some other stocks that I have on this list. GNRC. Oh, yeah. Ha! Speaking of hurricanes, This is actually an interesting, we didn't take this trade this year. Last year we took this trade. We should have taken it this year. There's a seasonality involved in here, starting in the late part of the summer into November or so. But all-time high on Generac. You know what they make? Generators. And they've done a very good job. A lot of people are saying that they want to get generators, whether it's whole house or portables. And this stock has done extremely well in the idea that there is a hurricane coming, depending on how intense it is. There's a lot of interest in this. Now, obviously, we didn't know back all the way in June that there was a hurricane, but this is hurricane season. Put this on your list to look at the end of the summer or mid part of the summer every year. Generac went from 55 to 77. Stock has done very well from an earnings standpoint and execution by management on all cylinders. So doing very well. Any other stocks we had? Let's see here. I think there was one other. Oh, somebody was asking me about Tesla. Let's take a look at Tesla. Tesla's up 3.5% today. There was something about exemption on tariffs on this. And Tesla's, though, from an aileron standpoint, this is a no touch, right? You know, we saw this rollover of this. We saw this nice moves higher all the way through here. It's in a nowhere zone right now. Same thing that we saw back here. It's in a consolidation. You can draw a very simple box around this. And when you look at this, you can see that. Let's see if I can draw a box real quickly around here. You know, this consolidation zone that we're looking at doesn't look really appealing. And what we see here is that the aileron is shooting for a downside action overall. So when we look at this and you get, again, confirmation on trend, confirmation on support, looking at things like the Commander series, when we see that, and that's why I put these together on my chart. These are two separate indicators that you purchase, but basically I put them together so I can see what's happening with regard to where the trend is and where the support is. And when I get those together, I feel I have a lot greater confidence in my trades. Go over to the TriggerCharts.com site, get all the information available, and make sure to put a review on the Trigger Charts over at TradeStation.com. Like this video, subscribe to it on YouTube as well. And we're going to pretty much end it there, and then come back next week, assuming that we're still here after the hurricane hopefully misses us, and we'll get to you on the back end. So thanks for joining me, and we will see you again next week.